In today's video, I want to share an incredibly accurate indicator that you might not have heard about before. It's a tool that helps us identify the best times to buy or sell in trading. To prove its effectiveness, I'm going to test it out 100 times using $1,000 as the starting amount. I'll also maintain a risk-reward ratio of 1 to 1.5. But before we dive in, I'd really appreciate it if you could take a quick moment to like this video. It helps our channel grow. Okay, let's take a look at the price of Euro-USD on a 4-hour chart. The indicator I'm going to show you is called the Bjorgum key levels, created by Bjorgum. Make sure you save it in your collection. Now, before we get into the trading strategy, let's understand how this indicator works. It focuses on 3 important points in the price action: breakouts, false breakouts or traps, and pullbacks. If we can accurately identify these points, we have a good chance of making profitable trades. But don't worry, we won't get too complicated with these key levels. As I mentioned earlier, I'll be using two more indicators to help us find the best trade entry points. Now, let's get into how the indicator actually works. To confirm a selling signal, the price needs to drop below a specific support level, which is shown in blue. Once that happens and the price closes below that level, the indicator will turn yellow, indicating it's time to enter the trade. As we look at the charts, we can see that for a sell signal to be valid, the price needs to cross both of these lines. And for a buy signal, the price must go above an important level of resistance. When these conditions are met, the lines on the indicator change color from yellow to blue. This indicator is really good at finding breakout points accurately, but if we examine some of these signals closely, we'll notice that some of them aren't great. For example, a sell signal in this case could have resulted in a loss, just like this buy signal. You see, when the market is moving sideways, it's harder to make successful trades. That's why we need to add 2 more filters to our charts to help us find better trade opportunities. So let's click on our indicators and find the first tool called the momentum-based zigzag, created by Bjorgum. We'll go into the settings and remove those labels because we don't need them for what we're doing right now, and we also have to change the color to a brighter ash. Now, you might be wondering how this indicator can actually help us, and it's actually pretty simple. The momentum zigzag acts as a tool to gauge the trend momentum, so we'll only look for buying opportunities when the price is going up, and we can confirm that by seeing green lines on the momentum zigzag indicator. This means we won't consider those long signals that go against the overall trend. Also, when the indicator shows ash lines, it usually means the market is moving sideways, which helps us avoid potentially bad trades. On the other hand, for selling opportunities, we'll pay attention to red lines on the momentum zigzag. This indicates a strong downward trend. By following this strategy, we can see that the signals become more accurate. But there's one more indicator we need to add to the chart to minimize our potential losses. And the indicator I'm talking about is called the ATR Stop Loss Finder. It's a really useful tool created by Verifit that helps us find a safe place to set our stop losses when trading. The idea is to avoid getting caught or forced out of a trade because our stop loss is too close. We shouldn't rely on the Bjorgum levels for stop losses because they're not always reliable. To give ourselves some breathing room for the price to potentially move back in our favor, we'll use a setting of 2 times the default value, which is 1.5. But if we want a tighter stop loss, we can use a setting of 1. So when we want to sell or go short, we'll look for high red lines, and when we want to buy or go long, we'll look for low green lines. For example, right now we have a signal to go long, so we can open the trade and use this level as our stop loss. Let me explain the steps for entering a long trade in simple terms. First, we look for green lines that go up, showing bullish momentum. Second, we want to see the price break out in a positive direction when it reaches a certain level, connected to those green lines. Finally, we start the trade when the candlestick closes. In this case, all these conditions are met, and we set our stop loss at a level determined by the ATR indicator, which is at a low point. According to this strategy, we aim to make 1.5 times the amount we're risking. It's important to remember that we only consider trades that match with existing key levels. We don't want to rely on new levels because they often result in false breakouts, so we'll only enter a long position if the high point of the green line matches the level that already existed. To find those important support levels, we can use a straight line tool. If we see a new strong line indicating momentum, but it doesn't touch any previous important levels, we ignore those old levels and focus on the new one instead. These levels could act as strong resistance points in the future. Alright, let's talk about the steps for entering a short position. First, we look for red lines that goes down, showing bearish momentum. Second, we want to see the price breakout in a negative direction. When it reaches a certain level, connected to the lows of the red line, it's important to only confirm this level if the lows of the red zigzag line match with a level that already existed. Once we have these conditions met, we start the trade when the candlestick closes and set our stop loss at a high level determined by the ATR indicator. Our goal is to make 1.5 times the amount we're risking. And when the market is not very volatile, the zigzag line might show ash-colored zigzags. We actually want to avoid those consolidations as much as possible. Now, let's look at another example. We see the price action forming a new red zigzag line, and we also notice that it matches with an existing key level. We wait until the line is broken before opening the trade. And you'll notice how well our strategy predicted the sharp downward movement. The indicators line up perfectly with that particular candlestick. If you're up for trying a different approach to managing your money, you can consider closing a winning trade as soon as the momentum in the price action slows down. In simple terms, you can exit the position when the zigzag momentum shows the next strong momentum line. This way, you give yourself a chance to catch a potentially big move. Alright, my fellow traders, I hope you understand the rules of this strategy. Now, let's try it out in a backtesting exercise and see how well it works in different market situations. Alright, after carefully backtesting this strategy with 100 trades, the results are truly impressive. We were successful in 68% of the trades, which is really good. Our trading capital grew by a whopping 70%, which means we made a lot of profit. The profit factor, a measure of profitability, is at a solid 3.19. We had a great winning streak of 5 trades in a row and experienced only 3 consecutive losses. It's also worth noting that our maximum drawdown, which represents the biggest loss we encountered, was kept to a minimum. These results clearly show that the strategy is reliable and has a high probability of success. To further confirm its effectiveness, we will continue testing it using paper money so we can see how it performs in real market conditions without risking our actual funds. Do well to include other trading assets to this, to be more engaged in the market while making those returns. Now let's rank our strategy on the trading spreadsheet with other backtested strategy on the channel. We can see it ranks second in terms of win rate. You can as well check out other backtested strategy on the channel, as the link to the video is on the spreadsheet. I just revealed to you the best breakout strategy with a solid backtested proof on Tradingview. All I ask in return is if you can take 2 seconds of your time and like this video. If you want to stay up to date with my future strategies, make sure to subscribe, because in my next video, I'm planning to release a strategy that works even better with some of the indicators mentioned in this video. Hope you guys all learned something from this video, and I'll see you guys next time.